Hey everybody, it's Greg Harrelson here with Century 21, the Harrelson Group, and of course my partner and also an agent with Century 21 Harrelson Group, Abe Safa, is always joining us on a weekly, on a weekly basis for the Myrtle Beach Real Estate TV. So thank you again for being loyal viewers and listeners. We definitely are committed to making sure that we're bringing you the most up-to-date news about the local real estate industry. So, Abe, thank you for being here. And I love the little caption there, no crash in sight for the Myrtle Beach real estate market. And, I think, when Abe and I put this stuff out, I think we use the word like no crash in sight, because a lot of times I get a lot of questions. Hey, do you think the market's going to crash? What do you think the market's going to do at the end of the year? What do you think about this? I mean, do you think the economy is going to go down? And surely we don't know a lot of those answers because we don't have a crystal ball. But I just want you to kind of have some insight that when we use language like no crash in sight, it's because this is what the consumers seem to be asking us. Because sellers right now have been asking, do you think we should sell now? I mean, is the market going to go down? Or I'm hearing, did I already miss the opportunity? And then on the buyer side, the buyers are saying, well, I think the market's going to go down, so maybe we'll just wait. So we are hearing a lot of that. But Abe, I don't think there's any evidence to show that there's going to be any crash. There's barely any evidence to say that the market's going to move in any direction, but kind of seems like it's going to stay level. I use the word flat, but then you like to use the word what? Level?
Yeah, level, balanced, stable.
Yeah, stable. That's what. So what are your thoughts on that?
Yes, I mean when interest rates, what was it last year when they went from, it might have even been a year and a half ago, when they
went a year and a half now. Well,
from 3% to 6%, when they doubled, we were getting a lot of these calls. Well, people were like, man, okay, it's coming, 2008 all over again, right? So there was a lot of people calling us and having those conversations with us. There was nothing at the time, no evidence that kind of showed that we were going in that direction. But there was definitely concern on you and I's part, right? When inventory all of a sudden doubled, like almost instantly, like, wow, okay, this is not a good sign to start with. But then if it flattened out again, right? So a lot of those people that were expecting crash and thinking crash, now those people are still calling, and now their conversation is, well, I'm not quite sure what's going to happen, is what they're saying.
Yeah.
The truth of the matter is this: if real estate is in a bubble, there is nothing out there right now that's pointing towards a crash. In order to have a crash, you have to have an abundance of inventory. So what ends up happening is inventory gets so high, demand is so low, it just sits there and it sits there, and then sellers become more and more desperate. They start reducing their prices. Buyers come in, make lowball offers, and little by little, they're buying stuff at a lower price, which brings the prices down. Yes, demand is lower now than it has been the last couple of years, right? Because interest rates are so high and homes are still priced very high, right? So there's less demand out there. But the big thing is inventory is just not going anywhere. Nationally right now, there's just over 1 million properties for sale in the entire country, which is like a ridiculously low number, right? That's super, super low. And our market was still sitting at 2.5 to a 2.6 month supply of inventory, right? So it's kind of like things are kind of just frozen in time, right? Prices haven't really come down much, maybe a couple of percentage points. There's some pockets in this market where prices have gone up a little bit.
Yeah.
Right. And there's some where they've gone down, but overall, it's kind of just stable. It's kind of flat, even though demand has dropped tremendously. So as long as inventory stays where it is, okay, it can't possibly have a crash.
Yeah.
Now I will add a disclaimer. If some external force out there, whether it be the economy, whether it be the stock market or something else happen, a war or something like that happens, that kind of shakes up the entire economy, could that maybe what stimulates and is the beginning of a potential real estate crash? Maybe, but it's just not happening from within right now. It's not imploding. As long as inventory stays as low as it is, we're good.
Yeah. The only thing I would say, like talking about external forces, is the condos. All right. Like an example of condos, like I think Abe and I would agree that from a market statistic standpoint, it doesn't seem like the condo market is going to crash. It doesn't seem like it's going to go extremely high. It seems like it's fairly stable. If we look at supply and demand, inventory and the demand that's out there right now. An example of external forces that we're keeping our eyes on in the condo market is Number one, insurance costs have risen aggressively, which for a lot of condo owners who are renting their property out, we're in that rental season right now. So they're just kind of like waiting to see what happens, and they've got good rental income, but we just don't know what's going to happen when the rental income starts to go down, because now we're out of the main season and people are going to start feeling the, that higher interest costs, whether or not they're going to consider selling. But that's an external, something that's not really the economy, that's insurance. The other thing that seems to be kind of like I hear a little bit of rumbling about is, remember that building a couple years ago that fell in Florida? That was just a terrible, terrible, event that happened. That did trigger for a lot of coastal markets. These inspectors and attorneys start to like question whether or not these older buildings are all going to need some sort of updating. And, we just hear a little bit of rumblings about that. And that's an external force, that there's more insurance companies, there's more engineers starting to talk about whether or not some of these older buildings need some massive overhauls. And that could mean big assessments. Do I know of any buildings that this is happening? I know one, but that's kind of, everybody knows about that. But I keep hearing it a little bit more and more. So it's nothing we can predict. That's an external force. If that does happen, then that might cause a little bit more inventory to come on the market because people couldn't afford the assessments or the increases in insurance, and that could affect it. But I just wanted to share that would be an external force versus like imploding, like you're talking about with the market.
Yeah, absolutely, Greg. But the first sign is going to be, it's not like insurance goes up and then the prices go down, right? We're going to see inventory begin to rise. So we're always going to be ahead of it in the sense that we see it coming. Like we look at inventory numbers every single day. But you know what? Insurance on homes has also gone up.
Yes.
I just got my insurance bill yesterday. My insurance went up 25% on my home.
Mm-hmm.
Right. So could that be an issue? Possibly. I mean, that's just going to be another layer into the affordability problem, right? Prices are still really high. Okay. Interest rates are really high. And now insurance is even higher. Right. Mm-hmm. So could that lead to something? Maybe. But right now, what we're looking at demand, okay, which is soft, or softer, I should say. And we're looking at inventory, which is still really, really low. As long as we keep monitoring those two numbers, we can see it coming.
So that's why we got the headline that we don't see, there's no crash in sight for our local real estate market. But of course, Abe and I will not rest on that thought. We will continue to look at the numbers, and we'll make sure that we're bringing that information to you on a weekly basis. And if you need anything from us, you can see our contact information at the bottom of this the screen right there. Reach out to us. Those are our direct cell numbers. So feel free to reach us by phone, by text, however you want to do it. We're here to help you out in any way, whether you're thinking about buying or selling now or in the future. Doesn't matter to us. We just hope to earn your business someday when you need a great real estate professional. All right, Abe, thank you so much. That's a wrap for today.
Thank you all for watching.
Bye, everybody.